So we organized this because, we're living in really, really unique or unprecedented times now. Today is quite interesting because the stock market went up so much. But what has happened recently was that, the Fed has been printing so much money, trillions of dollars, and government debt is going higher. And we really don't know how fiat or like cash in general is going to fare in the next few years. And since several years ago, when there was a whole rush of monies into Bitcoin and cryptocurrency, we already knew back then that the main thesis for this digital money or digital tokens was that they are decentralized compared to the fiat, which is run by and controlled by the governments, right? So today we're going to revisit that thesis again. I know in the last few years, the crypto markets have largely been moving sideways. There haven't been much action for investors. For the traders, there have obviously been a lot of arbitrage opportunities and lots of, chances to still make money through differences and trading in and out. But I guess for traders who have less time to really go keep monitoring the markets and reacting so quickly, there hasn't been much for us to act on. But I think today, now with the Fed doing all of this printing, it's time for us to revisit that thesis again. And just a disclaimer first, in today's session, it's really just a casual chit chat between Mr. Stingy, Aaron, and myself. So I'm Dawn from Budget Babe, and that's Aaron from Mr. Stingy. And nothing that we say here is going to be supposed to be construed as investment advice. Okay, at the end of the day, whether or not cryptocurrency is suitable for yourself and your investment portfolio will depend on yourself, right? You have to strategize and you have to see how it fits into your own asset allocation. But we hope that today, at least, bouncing off ideas from each other, especially with Aaron, because he is working full time in crypto as well. He's been following the scene. He's very, very much more knowledgeable in that sense compared to most of us, because he is literally in the thick of the action, right? So hopefully we can bounce off his ideas and pick his brain a little bit to kind of figure out where crypto can be for us. So yeah, thanks for tuning in. Aaron, anything to add before we start?
No, not really. But thanks, Don, for the very kind words and introduction. I've been involved in cryptocurrency for 4 years now. As Don mentioned, I work full time in a crypto exchange. But again, I'm not here on behalf of them. I'm here on behalf of myself, so we can talk openly, freely. Let me know if you have any questions. And yeah, let's have fun chit-chatting. Please interact with us via the chat box and Facebook Live.
Yeah, so we're going to get started. Aaron, will you be sharing the slide from your side?
Yeah, let me share my screen here. We're not really going to be, I don't think we'll be like very, heavy on the presentation, but I think it'll help to guide the conversation.
Yeah, so guys, please submit your questions, all right? Because this is really a casual chit-chat session. It's for us here to bounce off ideas. I may not be very familiar with some of the more recent coins. I see some questions from way in there, so we'll take that questions later. But if you have any concerns or any questions that you've been pondering about, please do let us know either on the Facebook Live chat or on Zoom, so that we can address that and we can chit-chat for a bit, right? Because this is going to be a casual learning session, and we're not here to, tell or instruct you on anything. It's really to try and understand exactly what's happening in the world today and where crypto sits on there. So yeah, let's get started. I'll start off first. So I think the key reason why we're doing this is because we all know we're now in the great monetary inflation. Is that what we'll call it? So, as the Fed has been printing so much money in the last few months in order to kind of like bail out the world in light of the coronavirus, which then caused the stock markets crashing, the economy were going down because of all the lockdowns, and there was a lot of debt that was rising, right? So even before this, we already knew since a few years ago that government debt has been creeping higher and higher. And the US government debt, the Chinese government debt, that's just insane. It's at like really, really record levels. And with what the Fed has done, I mean, I have to be honest, I was not expecting them to print so much. I knew they were definitely going to print, because if you look back at the historical playbook, what they did in the 2008 crisis was, to print money, right? And with this crisis, it's not that surprising that they resorted back to the same playbook. But I have to be honest that I was really surprised they printed so much, because that was unexpected. And it's making us question, as you all know, with money, right? the more you print, the more money there is out there in the system. But if your productivity, if your goods and services do not increase correspondingly, then it just leads to inflation. And history has already shown that has happened to so many countries where the money machine just keep printing and printing and printing. If I could invest in a money machine, printing machine, I would. But unfortunately, there's no such, there's no such investment, there's no such stock, right? But I mean, history has shown us and the value of currencies in some of these other countries has been really, really just tremendous. If you look at some of the African countries, it's just crazy how their money has gone to almost like literally little value. I wouldn't say zero, but very, very little value compared to the past. So yeah, this is I think the concern that all of us have on the inflation. And Aaron, what was your thoughts when you saw all the news and all that money that was flooding into the system?
So I'm just gonna go to the next graph, right? This is your graph. You pulled this out. I think it shows here that the Fed, or rather the central bank of the US, has printed. I think the monetary supply is now $7 trillion, whereas just a couple of weeks ago it was only $4 trillion. So in a couple of, I guess, weeks, the monetary supply has doubled. And if we go back like maybe 10, 12 years back to 2008, I think the monetary supply then was only something like $1 trillion or something. So it's gone up by 7 to 8 times, I think, now. But I think going back to the whole concept of printing money, I actually didn't understand that concept for a really long time. So maybe I just sort of want to vocalize it in my own words, right? When we talk about printing money, it means that because the economies are down, the governments need a way to stimulate the economy. The easiest way to do, normally what central banks will do, is they cut interest rates. They drop the interest rates lower so that people will start spending money and get the economy going. But in a lot of complex economies, or rather advanced economies, the interest rates are already zero or even negative. So they resort to expanding the monetary supply. Some people call this quantitative easing. But yeah, it's basically an expansion of the monetary supply. And like Don said, if your goods and services don't expand correspondingly, then you start to get inflation, or rather, you have a huge supply of money and the value starts to go down. So personally for me, right, it doesn't sort of make sense from a logical perspective, because in our personal finance, we believe that the supply of money is limited. If I have $100 in the bank, I can only spend that $100. But the first time I actually heard about this, the central bank can actually play with the amount of supply in the system. It was pretty mind-blowing to me, lah. And when I think about it up to today, it still doesn't really logically make sense, but I know that's how the system works.
I'll just add on to that. So there's actually there's a mathematical formula. Okay, so for those who may have studied advanced economics, there's actually this there's this formula that says how much you print, right? I think it's like by the power of 6 or 7. I can't really recall the exact numbers, but I vaguely studied that previously several years ago. And what it means is that for every dollar that the government injects into the economy, or maybe even like when you talk about foreign investments, right? Where every additional dollar that was not in the economy and now gets injected in will help to stimulate a lot more. So let's just use an example, right? If the government prints $100, that $100 that they could be given to your low wage worker. Then that worker will use that $100 to buy groceries, right? So the grocery boss now has money to pay the supplier, and he'll buy maybe like $100 to pay off his supplier, the debt that he owes his supplier. Then that supplier will take that $100 to pay back to, let's say, his landlord, right? And then his landlord probably has his own expenses, and the money just circulates in the economy, and it gets bigger and bigger because of that whole. I know there's a term for it, but I can't exactly remember. There's a something effect. Yeah, I can't remember. There's an exact term for it in economics where it basically describes this scenario of money growing in thank you Stella and WX, thank you. It's called the multiplier effect. That's it.
You have really smart followers.
Okay, anyway, so yeah, that's the situation that we're facing now. And I think with all the trillions of dollars, Aaron, if you could go to the next slide, we have also one that shows how much the monetary supply has actually gone up in the last few years. So if you look here, right, in 2008, where the last global financial crisis occurred, you can see that the Fed basically printed a lot of money. There's a huge spike over there, right? It's almost like a upward 890 degrees angle. And then later on, you go, it actually goes up higher and higher. And today we're seeing that next huge rapid spike again at the end, which is the time that we are at now, thanks to the coronavirus economic crisis. So we're again seeing this huge inflation. And we all know, I mean, all of you guys just think about it, right? What has happened since 2008? Has the price of your goods increased? Definitely. Has the price of your expenses, your rental, and anything else that you had to pay for, have all of those gone up? For sure. So the question here is that going to be the same thing that will happen today? No one's going to know for sure, but if you look at basic economics, you look at the multiplier effect, and you look at history, I have a very strong sense that this is going to be the reality for the next few years as well. We're going to see prices keep climbing higher and higher, and for people who keep their money in the bank or who don't know how to invest and generate better returns, that might be a problem for them. Yeah, unless of course your salary, your boss pays you more money, and that wouldn't be so much of an issue. But the question is, how many bosses would do that for you, right? So instead of leaving it up to them, I think for us, we want to know what can we do to basically react to this. Yeah, so I'm pretty sure that inflation is gonna happen. Aaron, over to you.
Yeah. So just I have a huge concerns about inflation happening, and I think that will nicely lead into our conversation about Bitcoin shortly, right? That being said, I just want to make a remark on the global markets, right? It seems like our world in many ways doesn't make sense anymore. Again, this is US data, but every week you hear more and more millions of people in the US being unemployed, or rather filing for unemployment benefits. I think the number I last read was something like 30 something million already. And yet you start to see the stock market continuing to go up and up and up. And I think we are at if I'm not mistaken, we are the same level as October or November 2019 already. So, with all the shit that's happened, right? The coronavirus, businesses shutting down, the stock market is actually doing pretty okay if you look at it from on a long-term perspective, which to me again doesn't make sense. And it's a very interesting world that we live in right now.
I think it's very weird. I don't understand it either. The stock market has always been forward looking, but historically it has never reacted or has never recovered this quickly. So I mean, no one really knows what's going to happen tomorrow. Just like just 2 weeks ago when I was buying in again, I was just telling my husband, "Dang, I bought and then it dropped again. So sian." And then after that, today I wake up and there was like so many messages on my phone because everyone was saying, "Hey, it's going up, going up." And I looked in and I realized, I'm up like almost 10% on something that I literally just bought yesterday. That doesn't even make sense. The company has not gone up in value or 10%. I mean, they have not made more revenue or anything at all. So what has changed? It's really the sentiment. I think it's very hard to predict sentiment, but historically, if we look at things, right, at least one thing's very clear. We can only take a leaf out of history's guidebook, but that may be all that we have to guide us into the future. And because of that, because of what has happened in the monetary playbook, this may be a case for potentially digital currency.
Yep. And I think one last thing, since we're talking about the stock market, something that I guess it's a theory that's quite widespread now. A lot of people are saying that all the money printing, Wei En actually put the money printer thing, right? All that money printing, it was designed to actually stimulate the economy. So the idea is trickle down economics, right? If we're throwing jargon around, I also want to throw jargon, right? The idea was that you pump money into the banking system, you pump money into like the insurance companies. They would eventually let this money trickle down to the regular people on the street. But the what do you call that theory is what actually happened is all these companies took this money and then did things like buying back their own shares, or giving their executives huge bonuses. So in the end, the guy, the layman on the street didn't actually get much of the benefits, but everything related to the financial markets, the stock markets have just been going up like crazy since 2009. All those things have continued to go up. So it's a bit weird that, you know, all this money printing was supposed to help, but maybe it's only helped the actually the investing community, and all those people who don't invest are actually struggling even worse and more and more.
Yeah, exactly. And on that, right, I think, you know, there's just so much sentiment driven. I mean, if we look back at history, what history has also shown us that the real reason why the stock market goes up and the stock price of a company goes up is always tied back to the fundamentals. But that fundamentals seems divorced from the reality of the stock price that's happening today. So it's something that we don't really understand. It's great for traders, right? It's so easy to make money now if you're a trader. I mean, if you're willing to take that risk and you hedge it right. But I think for the long-term investors, like most of us are just scratching our heads and wondering what's exactly happening. So on this end, because you know, at the end of the day, we don't know if it could correct, right? If something becomes overvalued, okay, and there's very little reason for it to be worth that much, at the end of the day, it should rightfully, logically correct back to what it really is worth. So we don't know if this, with the stock market, are going to go through that correction. For all we know, it could just keep going higher and higher because people are too optimistic, or because other assets are not offering them the kind of returns that the stock market can give them. The thing is, we don't know. But if we look at historically, and I mean, the stock market has been around for like hundreds of years. And throughout this whole time, it has always been very, very closely related to fundamentals. So if that's the case, right, if the stock market corrects and if all of your assets, everything that you own is in the stock market, the next question to ask is then, how are you hedging that? And I guess that leads us to the next point, where more investors have been embracing Bitcoin in recent months. So, Aaron, this is totally your view. I'm going to fill this back to you.
Yeah. I think there's a couple of things, right? And maybe you want to throw some questions as we go along, because if not, I'll just go on an endless monologue about Bitcoin, right? I think the one of the first what do you call that use cases that Bitcoin proponents were suggesting is that Bitcoin is going to be digital gold, or rather a safe haven asset. So in times of stock market turbulence or in times of economic turbulence, people would invest their money into Bitcoin because the value would not drop. So this was actually one of the original early sort of really OG kind of reasons for buying Bitcoin. Among all the reasons for buying Bitcoin, that probably is the one that has remained the strongest. There's been a couple of other reasons, right? Like some people say, oh, I'm going to buy Bitcoin to do remittance. I'm going to use Bitcoin to make micro payments. All of those kind of use cases, you know, they continue to sort of linger, but the real big use case seems to be the store of value kind of thing. If we look at it historically over the past 10 years, obviously nothing can match Bitcoin's gains over the last 10 years. If we look at it, if we look at just the past year to date, which means January until now, I think Bitcoin is number one, gold is number two in terms of best performing asset classes. If we stretch it a little bit to say 1 year, I think stock market actually has beaten Bitcoin a little bit.
But that was kind of because last year we had extraordinary days.
Yeah. So I mean, the thing is, I actually believe in this this sort of long term value store of value kind of narrative or story myself. I think that's the reason why I invest in Bitcoin, and I think that's a reason why a lot of people also, because it's kind of I guess it kind of makes sense kind of thing. You have on one hand an asset that is limited in supply, right? The supply is predictable using mathematics algorithm. The supply of Bitcoin is absolutely predictable. You know exactly how much there will be. So it kind of makes sense to the logical mind, like limited asset versus unlimited fiat currency printing. I want to have a bit of that limited edition stuff lah.
Yeah, exactly. And I think, you know, with Bitcoin, it's very hard to judge Bitcoin just based on this few years. So many people flooded into the cryptocurrency market a few years ago, right? And then, you know, people are saying, oh, that was all a bubble. And I think the really important thing to know is that we actually don't know if that's for sure. Because it might have been a bubble in the short term, But you know, if one day Bitcoin, I mean, paper says it best, right? It's like it's going to be a 250,000 per Bitcoin. We don't know if that's going to happen, but if that materializes, right, no one is going to call the last few years a bubble anymore. In fact, they would say, yeah, on hindsight, I should have totally gone in even when Bitcoin was $20,000. So we really, really don't know. That's the key. That's the most important thing. But if we go back to basic economics, for basic economics, right, it's about demand and supply. And when you have limited supply, a fixed supply that everyone knows how much it's going to be, but the demand currently keep increasing because there's more use case, there's more users coming in, then you know that will become more and more valuable because there's only so much to go around, right? And that's exactly the same premise that lots of luxury brands and luxury producers use in trying to control the prices because it's a very fundamental economic theory. And if we go to the next slide, you'll see that even the statistics support this. More investors, it's not just us, it's not just the people who were in a few years ago. Okay, this looks at 2016. So like that was the period of the so-called bubble, right? And if we look since then, right, the number of people who have actually opened wallets for Bitcoin has actually gone up even more. Right, we're nearly at 5 times more now. So that's the thing. And it lends credence to the demand portion, where there's a lot more demand, there's less supply. In terms of the prices, yeah, the prices may not have reflected that, but that could also be because a Bitcoin wallet may not be their only wallet. They might have opened for other cryptocurrencies. They may have used Bitcoin as the first one that they changed from fiat to Bitcoin and then to buy others, right? So if that's the case, then they will move on to all. But at the end of the day, what we can see and what we know for sure is that at least the number of users have definitely gone up by a lot. And if you take this from a very basic supply-demand perspective, then there's that argument that the prices should eventually correct back to what they are worth from basic economics.
Right. By the way, Mr. T Hock Chiu says your voice a little bit low, Don. Possible to maybe? Oh yeah. Okay.
Connect my mic.
Okay. Awesome. Let's hope that works. So maybe while you're connecting that mic, right? Let me just share some thoughts on Bitcoin adoption. So I recently wrote an article. You can check out my page, right? mr-stingy.com if you want to have a read. I recently wrote an article about my sort of 4 years in Bitcoin. I think when I first joined it, when I first invested, I was a bit viewing it as an experiment, right? I'm thinking, okay, this is something interesting. Let me put a little bit of money and see what happens. About 1.5 years in, I decided there's so much promise here that I'm going to go into it full time. And then now here we are 4 years later, right? I think it's quite clear in the data that, there's more and more interest over the years, right? When people say bubble, they always refer to the price. But if we look at things like what you've shown here, the number of wallets, if you look at the number of people that are signing up to cryptocurrency exchanges, if you look at the number of transactions happening on the blockchain, or if you look at the number of miners in the Bitcoin system, you can see that there's an unmistakable trend, right? It's continuously going up. And that's why when I wrote that article, basically I was saying that 4 years ago it was just an experiment to me. Now I'm I believe in it more than ever.
Yeah, definitely.
Awesome. Your mic is loud and clear now.
Great. Okay. Yeah, so I think that we need to understand the fundamentals and the prices may not always reflect. Okay, this is not just Bitcoin. It's happening even in the stock market, right? Let me ask you guys a very simple question. How many of you will pay 50 times of what a company is worth to buy its shares? Means you have to wait 50 years in order for the company to make that amount if the earnings are constant, right? I mean, if you look back at basic fundamentals, you look back at basic valuations and all the metrics that you have been taught and learned over history and in the books and courses, they always tell you do not buy. 50 is overpriced, right? But whether is it really overpriced, we also don't know, because if it's a great growth stock, then maybe the 50 might be overvalued today, but it will become cheap in the future. So we really don't know. It doesn't always mean that the price of an asset is always tied to the fundamental value. We have seen in recent times that doesn't seem to be the case. So we will put price aside for now. We'll talk about the fundamentals itself, and then you guys have to decide for yourself if you think that's a strong case for digital gold. But on the next page, I wanted to also share one of the reasons why I haven't yet given up on cryptocurrency and I'm still bullish on Bitcoin and crypto in the long term is because you start to see a lot larger names coming onto it. So if we go back to the 2016 to 2018 period, right, where the so-called bubble was happening, a lot of the banks were all against it. So governments were saying they're going to ban it. The banks were saying it's a scam, it's not, it's too risky, and it's a bubble, and they refused to have anything to do with it. But recently, I think this was last month, right? It was only a few days before today that Goldman Sachs actually had an event that discussed Bitcoin. Now, I wasn't at the event, so I don't know what exactly they talk about. But the fact that Goldman Sachs is even putting their names behind this is interesting to me. Because if this was really a scam, if this was it's an asset that people are definitely going to lose their money in, I don't think a reputable bank would put themselves behind this. And okay, this is not related to Bitcoin, but even when we talk about blockchain, we talk about digital currency, right? Even China is now looking at it. So you guys can go and research about how China is trying to create their own digital currency. And if they're successful, I don't know, we might start to see a huge rise in that in a few years to come. But it's too soon to call this whole asset class state. And with more people putting themselves behind this, I think that's definitely something interesting and a little bit more reassuring to us as retail investors. Aaron, what do you think about Goldman Sachs? And I think GS was not the only one, right?
Yeah, I'm going to share two stories. So GS or Goldman Sachs, they presented their thoughts on Bitcoin. It wasn't a bullish one. They basically said stuff like, they don't consider Bitcoin an asset class. They consider it, don't know what, a commodity or something, hybrid or something. They weren't very, very confident in it. But of course, you all should also know that Goldman Sachs has investments in Circle, which I think is a cryptocurrency linked company. So Goldman Sachs are probably hedging their bets. There's some parts of the bank that may not be believing in it. But on the other hand, they also get involved by investing in crypto-related companies. So make what you want of that lah. A lot of people, say conspiracy lah. Goldman Sachs say don't buy, but on the back end they go and buy themselves, right? The other story is, of course, JP Morgan Chase, the largest bank in the US. Their CEO, Jamie Dimon, I think as of 2017 was still saying Bitcoin is a fraud. I wouldn't touch it. I would fire anyone who invests in it. Fast forward 2 years later, 2020, JP Morgan has already started banking for cryptocurrency exchanges. So they've made a 180-degree U-turn. And I think this is a consistent story we see across many countries and many big companies. To me, the winds of change are very clear. Yeah. So yeah, more converts coming in right now.
Mm-hmm. Yeah. So I think it's also, I expect to see all these big names changing their stance here and there, right? So let's see how that goes. But yeah, I see someone on Zoom raising their hand. So you guys can type on the chat so we can see it and we can address those. Yeah. So anyway, moving on. I think that on the next slide, what we also found that was quite interesting was that, I was reading this article about that Paul Tudor Jones, who is largely a macro investor, and he was telling Bloomberg, or at least it was reported on Bloomberg, that he's buying Bitcoin as a hedge against the inflation that he sees coming from the central bank money printing that's happening right now. And we were not alive in the 1970s, so we don't know this, but he, who was alive and like kicking back then, he says that this reminds him of the role that gold played in the 1970s. So we don't know if that's going to be the case, but at least we can see that he shares the same view with regards to the huge monetary inflation that's coming with all the printing and the unlimited QE that the Fed has been pumping into the market. I think that's not related to this topic, but on the Fed side, right, people have been asking why they're buying even junk bonds. So it really is hard to understand what exactly is happening. But one thing seems more likely than everything else, which is that inflation will probably emerge as a result of all these unlimited money printing. So if you believe in what has happened to gold previously, if you believe in basic demand and supply economical factors, then that could be one reason to hedge using Bitcoin or any other digital currencies that you think is a safer asset class to the fiat situation. And then on the next slide, he also has a very good quote there. He calls it the great monetary inflation. So that's where we got the idea from. And he says it's an unprecedented expansion of every form of money, unlike anything that the world has seen. And he said, he's also considered there are many ways you can hedge it, right? It's not just cash, it's not just stocks. You could also use real estate, for example, to hedge. If you guys are super bullish on China becoming the next economic power, which I think it is, but anyway, if you are, why not buy real estate in China? Why not buy shares of China giant companies? There are lots of options for investors to choose from. And for Jones, he actually said that he considered, gold, treasury bonds, stocks, currencies, and even commodities, but he chose Bitcoin because he thinks that is going to be the fastest horse. So that is what he said. And in the next slide, you can also see that he confesses he's not a crypto nut, but he feels that the most compelling argument for owning Bitcoin is because of the coming digitalization of currency everywhere that has been accelerated by the coronavirus. And we already know China is beginning on this. So if China is the first, it doesn't mean that they're going to be the last. Who knows, more countries might follow. So if that happens, then you're going to have a stronger and stronger case for such digital currency. And Bitcoin being like the main one that everyone talks about and is familiar with, you might start to see a rush of money into the area. We don't know, but that could be the thesis for it.
Yep. Just to add to your point, right? No one is suggesting that Bitcoin is going to become it's going to conquer everything. Put 50% of your money in Bitcoin, put 80% of your money in Bitcoin, because everything else will go to ruins, right? I think if everything goes to ruins, we have bigger problems to worry about than trying to get rich. Probably we have to worry about food and survival and not killing each other first. But a lot of I guess learned people, a lot of people I respect in terms of investors, both on the international and local scene, right? A lot of them sort of do it from a very statistical, or maybe you can even call it like a probabilistical kind of view. Like to a lot of people, I'm gonna just hedge, say 1 to 2% of my net worth in this alternative asset. Let's be honest, it's still an alternative, it's still a new kind of asset. I'm just gonna put 1 to 2% of my money there, right? With the expectation that it might grow 5 or 10 times, okay? But with also the expectation that it might drop and I might lose my money or a portion of my money. So I think, I hate to sort of bring the term gambling into it, but if you like, say, poker, you like mathematics, you like counting statistics on blackjack tables or on poker tables, right? You understand that sometimes you take these calculated risks in order to get the bigger payoff, and that this calculated risk is a risk, right? You might lose it, but you do it with knowing fact that you're taking a risk because you might get 10 times the payout.
Exactly. So we're under no qualms here that anyone's going to get rich from putting your money into Bitcoin right away, right? Mm-hmm. Because for all you know, that could take us several months, it could take us several years, or it might even happen in our children's lifetime. No one knows when that time will be. But the key messages always hold. And for those of you who have been following me since early on when I started investing, and from when we were talking a lot about Bitcoin during that so-called bubble, right? I had to keep emphasizing the bubble because we really don't know. Yeah. So if you guys followed me, one of the key things that not just myself, I think even Aaron and many people were saying is that this is still new, this is still risky, so only put in money that you don't need and can potentially afford to lose, because we really don't know where it will be. And I can be very honest, even if like you talk about your network, it's the same thing for me. Most people I know are not in Bitcoin or cryptocurrency, but I do know a guy, and he's quite famous in the Singapore scene, where he was basically declaring that he sold out all his stocks and everything to go into crypto during that so-called bubble phase. And he's already a millionaire, right? He made his million from cryptocurrency. It's good for him, and I'm super in awe of what he has done. But if I look at what he did, right, it's something that maybe I myself or some of the rest of us might not have been able to pull off, because it involved a lot of trading, a lot of monitoring of the markets, going in and out. And if you didn't have that time and energy and research to spare on that, then that might not have been something that you could capitalize on. But at the end of the day, whether or not this could be a good hedge, I think I have to agree with you, Aaron. There is a case to be had to allocating a portion of our portfolio to it, while recognizing that it is a risk. It's a calculated risk. It could go to zero. It could be a very high risk. I don't think it will ever go to zero, but just saying that it could. But at least this is something that we might use to be able to hedge the rest of the assets that we have.
Awesome. 100% agreed.
Mm-hmm.
Yeah.
Okay. I think I see a really good question from Hok Chu. So he says that is there a possibility that the rollout of China's digital currency or other countries in future might hamper the development of Bitcoin, given the digital currency will be endorsed by governments, whereas Bitcoin might not? Maybe. We also, again, we don't know. I think for China's digital currency, though, there's going to be a lot of pushback. Because as it is, we're already seeing all that pushback from the US. They're already not happy with what China is doing, and they're trying to, suppress China's economic rise. So when trade tensions are really that bad, and we haven't even started talking about digital currencies, right? You just logically think about it. If it's already like that right now, would they embrace the digitalization of China's currency? I would guess that they would not. They're going to try and fight it for as long as they can. But then the next question is, do you think the Chinese government is going to give up? Again, I don't think they are, right? Because the Chinese, there's this thing called 面子. So for those of you who don't know what it is, it translates to face, or in better terms, pride. And the Chinese care a lot about face. So if you really go back to China's roots, right, 面子 is super important. I don't think they're going to try and do anything that is going to make them look super bad. So I think as much as they can, they're going to try and fight it, especially since they've prominently gone out there and declared. They could have just kept silent, right? They could have just tried an experiment on their own and not tell anyone other than those who were on the project itself that they're going to try and roll out digital RMB, digital Chinese currency. But they went out there and said that they would. So that's going to be something that you have to take note. There might be some pushback. I don't think it's going to be immediately hampering the development or the value of Bitcoin. Wei En also raised a really good point, which is that state-backed cryptocurrencies may be more assuring or legitimate in that sense, but that's not the whole premise of digital currency in the first place anyway. It's what governments are trying to do now that they are starting to see that, oh, you mean digital currencies actually work? You mean Bitcoin, people are actually putting their money into it? I mean, if you go back a few, you go back a little bit further back into history, recent history, right? Bitcoin was super cheap. And it was actually used on the black market, right? So you could get so much Bitcoin if you just put in $1,000. But today, $1,000 will not even get you one Bitcoin. It'll only get you a fraction of it. Yeah. So whether or not state-backed currencies will succeed is also another question. But I don't think they're exactly on the same playing field as digital decentralized currency, which are founded on the premise that we can't trust the government with the money in the first place.
So I think from a different angle, right? Excellent points there, right? From a different angle, I think that you can't speak about digital currencies without referencing Bitcoin. I think even if the state-backed digital currencies make it mainstream, everyone starts using it, right? Somehow or another, people will still get aware about Bitcoin because Bitcoin is kind of where it all started from, right? So sometimes people ask me about Libra coin, what about this coin, what about that coin? Is it going to replace Bitcoin? I think all these developments actually help raise awareness and spread development further about Bitcoin and how unique it is, rather than actually supplanting or replacing it.
Mm-hmm. Yeah. I think you got a really good slide on the next one. Do you want to share that?
Let me see. Oh, okay. This is something that I really drew up, and I've kind of briefly mentioned it already. So very, very simply, right? Blue line here is Bitcoin's performance, Bitcoin versus USD. Red line here, S&P 500, which is the US stock market. Orange line here is the KLCI, Malaysian stock market. And the light blue one here is the STI. Don't know why Singapore doing so bad recently. This was just taken last week. So you can see, right?
Yeah, it recovered today. I have to defend my country. Yeah,
okay.
Huge rise today. I open my app now, is everything green. But anyway, yeah, go on.
Okay, great. I purposely chose from last week, right? Just to prove a point, right? Malaysia boleh, right? So you can see that in mid-March, right, everything just died. everything completely died. Whether it's Bitcoin, S&P, Malaysia, Singapore, everything died. And then over time, Bitcoin has sort of decoupled from the rest and recovered faster. Singapore is roughly still down. Malaysia is also roughly still down. The S&P has more or less recovered quite strongly. But again, I think it's a bit too early to tell whether we are really out of the depression or the recession. If you ask me personally, I think it's a bit artificial. It doesn't make sense, right? 30 million people unemployed and the stock market is doing so well. Doesn't really make sense to me lah. So yeah, I think just this graph to show that Bitcoin after the first drop has actually recovered quite well. Again, past performance is no guarantee of future results, but yeah, it's interesting. And if you look at over 5 years, over 10 years, of course, nothing can match Bitcoin lah, basically.
Yeah, so I think that's a really interesting chart, and we don't know if this is going to go even higher. If you ask Draper, he'll tell you that it is, right? Because his thesis is like $250,000 per Bitcoin, and although I don't know if that's going to happen in my lifetime, but if you believe, if you're convinced by him as well, then yeah, that could be a thesis that you could hold. But maybe at this point, we're going to start taking questions and answering some of the great questions that you guys have put into the different chat. So I'm gonna start fielding the ones on Zoom first, and then let's field the ones on Facebook. All right. So keep your questions coming, and we'll discuss that. I see here that Lucas asked about the learning curve for for fundamental analysis of crypto, and I think someone on Facebook also asked the same question. Yeah, Christopher also asked the same question, right? So okay, I'll share my experience, and then Aaron, please jump in. But
Right.
when I think it comes to FA, right, what my experience from 2016 to 18 has shown me that FA seems to not always match the actual price. So I used to be a super big advocate of FA, but over the years in my own investing journey, and not just in crypto, I am also starting to see that the behavioral sentiments of the other players in the market can play a very huge impact on the prices itself. And to be honest, that's something that I don't know how to manage. Right? I don't know. I can ask my people around me and say, hey, do you think like the stock market is good? Is going to go up or going to go down? Do you think this stock is going to go up or going to go down? But that is not even representative of the entire market, and it's very hard for us to control, because what seems logical may not always go up, but what seems illogical could happen. So the key thing is we don't know. But when it comes to FA, right, I would just caution. I think Lucas, you asked about whether to DCA into this. I personally would choose not to DCA, because I feel that the timeline for cryptocurrency is still quite unknown. Right? Unlike stocks, where there is very strong value that the whole world recognizes, the key thing here is the entire world. Right? The entire world recognizes the hard assets that are in stocks, which are like your branding, your technology, your real estate, so on and so forth. And the world recognizes those. So even if you had to liquidate the company goes bankrupt, there's at least some kind of value that people can still get from that company. However, in crypto, right, this is not necessarily the case. And I don't know how long the world will take to start embracing digital currencies as a whole. So because that timeline is so uncertain, it's hard for me to try and figure out how exactly to DCA in, because this time could be much longer. I might run out of money sooner than the price goes up. So as a result, I would rather use the LSA method, which is LSI, which is lump sum investing. And as and when I have spare cash that I think I can potentially afford to lose, while still managing it as a minimal percentage of my entire portfolio, I would choose to buy in. But I wouldn't consistently DCA in. It's something that I would recommend for stocks that you're bullish on. But for crypto, I personally think it's quite hard. What about you, Aaron? Do you think is DCA into crypto something that you personally practice?
Nice. I'm first time hearing the term LSI, so I'm adding it to my vocabulary. That's very interesting. So whenever people ask me about DCA, I think DCA is valuable because it sort of takes the what do you call it? It takes your human tendency to want to time the market away from you. So you don't know when to buy, right? You don't know when is 10,000 overvalued, is 9,000 undervalued. You have no idea, right? So you try and play the market, you try and time the market. And I don't think most of us have that ability. I think DCA is very useful for that. Basically, you're saying I have spare cash 100, I'm going to spend this 100 into crypto every month. Every month on the 31st, I'm going to buy no matter what. I think it's very useful from a behavioral perspective. In terms of the FA, I'm not a big FA or TA person myself, because I know really elementary charts reading. But I recall this famous statement by one of the investors. I forgot his name. He said something like, the market can remain irrational longer than you can remain solvent.
Solvent,
Yeah.
yes.
So you say that I'm gonna wait till the price drops because the market is irrational, right? I'm not gonna buy in, but you may even your time may pass, you may run out of money, and the market is still irrational. So I think markets just behave their own way, and to me, that's why I think long-term investing is so important. If you invest for a period of 10, 20, 30 years, then you don't worry so much about the ups and downs.
Yeah, I think on FA, right? So I'm a huge FA fan. I'm not so much for TA because I find that there's just too many assumptions, and TA works both ways, right? So I'm really not a fan of it. Plus, I can't react in time. So it's really just not a suitable thing for me. But I have to acknowledge that I think in crypto so far for the past few years, TA has actually been a lot more useful to people than FA. But in terms of fundamental analysis, I can share how I analyze the ones that I had back then. So I would actually look at first the technology. So first the pain point, right? What exactly does this digital currency or this digital coin seek to solve? Then the next thing I'll see is how well can they solve that problem. Next, I will look at the investors who back them or the founding team. Do they have the expertise to be able to bring this to fruition? Have they have prominent investors who have invested in them and will help give them that funds to help push them until they succeed? Right? And then after that, I'll look at the product or the technology. Now, obviously, I am not a IT expert. I didn't study computer science or engineering. So it's very hard for me to understand the code. For some of you who are a bit more technologically advanced, right, you all can check out the codes on GitHub. And there's a lot of discussions on there. Okay, you can actually verify the codes. But trust me, I have tried to learn. I tried to learn so hard, but I still cannot understand. So I will not pretend to be an expert on this. I'll just tell you upfront. I try, but I still don't understand it enough. So that could be another layer that you might want to add into the analysis. On top of that, I would also look at the users, right? So ideally, as the digital coin, right, you need to have demand supply. So if there is very little demand for it, there's not a lot of users who are going onto it, then to me, that whole demand supply thesis is broken. So I wouldn't go into it. Yeah, so these are some of the areas that I would look at in terms of trying to analyze Bitcoin, or not just Bitcoin, any cryptocurrency. And if you guys are interested, I have a whole thesis on Ripple that I wrote several years ago. So I had to disclaim first, I have not been following Ripple because I basically crossed it out my watch list after I did that analysis. So if there's been any recent progress, I don't know, and that does not take it into account. Okay, but at that point in time, I did a really, really extensive analysis, and I documented that on my blog, explaining why I wasn't convinced that Ripple would be a good coin to hold and invest in. And part of the reason was because Ripples mainly existed to function between as a form of money transfers, right? And they were saying that a lot of the banks were using it all, but at the same time, there were other options that they could use. So I wasn't too convinced on the demand side of it. But Ripple was going up and up and up and up, and then it crashed down again, and I don't know where it is now because I haven't been checking. But that's just some of the parts that I would talk about, I would look at when it comes to FA. Yeah, but after saying all of that, I'll still caution you, like the quote that Aaron shared, which is one of a really, really great quote that everyone should remember. Don't rely too much on FA in crypto, because I think we can try, but at the end of the day, just acknowledge that there is still, unless you really understand the code, right? And unless the management team is really, really supremely successful at getting all of that to fruition, there is still a chance that it may not materialize. So I will still do FA, but I won't place as much weightage on FA on crypto as compared to the FA emphasis that I have when it comes to stocks. Yeah, so that's on FA.
The other thing to remember is, stocks have been around for hundreds of years. Universities devote research teams to writing papers, studying it, putting simulations to simulate it. Bitcoin crypto has been around for 11 years. We haven't had that amount of data to crunch and sort of predict behaviors. So it's a little bit hard for the I guess the there's no discounted cash flow mechanism to value crypto available today, right? There's actually a couple of theories already, like this. I forgot what the big theories are, but they need to be tested for years and decades before we'll be able to say that this looks to be quite accurate lah, and I don't think we're there yet.
Exactly. So underlying thing that we'll share is take FA with a piece of salt. And for DCA, consider if you can remain solvent longer than the market can remain irrational. Okay, the next question that we'll take is, so I think also, JY, you shared, how can we measure the value between Bitcoin and other cryptocurrencies? So there's a really good link that YZ has shared over there. But Aaron, do you want to take this question?
So I think there's I'm not 100% sure about the question, so I'm going to answer in two different ways. If you're the one that YZ shared is the dominance, like how much market share of the cryptocurrency market is. So I think Bitcoin current dominance is about 65 to 70% of the cryptocurrency market is Bitcoin. That's why I think I would recommend that for if you're just starting out, try and look at Bitcoin first because it's the main cryptocurrency. Even at one point of time, people were thinking that Bitcoin is going to relinquish its throne to some other cryptocurrency. And now we look back and we laugh, like, how laughable that is, right? Bitcoin now is 60, 70%. If you're talking about the exchange rate between Bitcoin versus other cryptocurrencies, you can go on websites like CoinGecko.com, Gecko as in the lizard, CoinGecko.com. And they will tell you all the exchange rates between Bitcoin, Ethereum, Ripple. There's so many cryptocurrencies in the world. Check out CoinGecko. They are our very proud made in Malaysia, and I think got made in Singapore, partly made in Singapore product as well. So we're very proud of them.
Okay, so the next one, I see Brandon is asking, what are your thoughts on the sudden drop in Bitcoin price that caught a lot of investors on the wrong end on Tuesday, $800 basically in around 5 minutes? Okay, so the answer to that question is we don't know, right? Prices are driven by sentiments in the short run. And it is very hard to predict where the types of sentiment will turn. You can say that of crypto, you can say that of Bitcoin, but didn't the same happen for other stocks in the real world as well? Okay, I shouldn't say real world, right? Bitcoin is not real anyway. Okay, so anyway, I should rephrase that. Isn't that exactly what happened with oil futures as well? And with many other stocks, right? They have basically what we call gap down, and there's also gap up. So it's very hard to predict all this. You can use all your trading models in place to try. But I would personally just say that I don't think I can predict this, and I don't think I can react in time for it, which is why, right, for me, it is never about using leverage. It's never about using margin. It's about using money of my own that I have, and I don't have to be accountable to anyone else if the prices go the other way. So if it goes to zero, then I lose that amount, right? So in this case, for example, when Bitcoin went down by 800, if you had leveraged it, if you had borrowed and you had to pay it back, then obviously you're going to get affected. But if you're a long-term investor or a long-term holder, that's the crypto term, right? So if you're a long-term holder, then that would be just a blip in the long term, seriously. Because it may recover, and who knows, it might recover to even more than 800 times, like 800 times 3, times 5, times 10, or Draper will tell you times multiple hundreds.
You seem to be a big Draper fan, huh?
No, I have to just emphasize that is his view. I am not. I don't think it will hit 250K in my lifetime, but I would love to be proven wrong.
Okay. Yeah. For some people's reference, you want to share who Tim Draper is for some of the audience?
So for those of you who don't know Tim Draper, he's one of like the most vocal, bullish investors for Bitcoin, right? And I think he has been well known ever since several years ago, and he makes this crazy prediction that Bitcoin's gonna hit $250,000 per coin. Right now, Bitcoin's like about 9K, 10K ish. So that's a huge margin, right? So if you believe in his thesis, you can see where it's going. But if you're skeptical, then yeah, it's up to you to evaluate. So recently, he also shared that, with the COVID-19 global lockdowns, he claims that when the world comes back from this whole lockdown, it will be Bitcoin, not the banks and not the governments that save the day. And he gives like a few use case scenario for Bitcoin. So there's a lot of there's a lot of details in his argument as to why he feels he is so bullish for it. So you guys can go and read it if you want. Just Google Draper Bitcoin 250,000 and you can read to understand his opinion on it. But at the end of the day, yeah, you might want to just take what this guy says with a pinch of salt as well, because I feel he's super, maybe to an extent, overly optimistic. But it's always nice to hear on different sides of the spectrum. Yeah.
Nice.
Okay. So more questions. I can see Facebook, we have a few questions coming in. So earlier on, we had a question from, hold on. Okay, we're going to talk about the coins in a bit. But before we go to the coin specific questions, let's talk about the more general ones first. Emilia asked, how much is the minimum to buy Bitcoin? Is it easy to liquidate? And where can you get it from a trusted and credible source? Aaron, this is your time, man.
So disclaimer, I work full-time for Luno. Luno is a cryptocurrency exchange, and might I say the best cryptocurrency exchange in Malaysia. We're also active in Singapore. I'm not Singapore. There are a lot more competitors, so we are one of the cryptocurrency exchanges in Singapore. So if you're in Malaysia, you can get started as low as RM3, which is super cheap, right? Cheaper than the coffee you drink. And it's very easy to liquidate. It's very easy to get your money in and out. Trades happen instantly. So the moment you click sell, you get the money in your wallet already. You click withdraw, it gets into your account, if not on the same day, on the next business day.
Yeah, so I hope that answers your question, Emilia. If you have more questions on it, you can ask Aaron.
Oh, yeah, sorry. Just to note, right? In Malaysia, there are regulated exchanges. There are 3. Luno is one of them. In Singapore, there are also exchanges applying for the license by the Monetary Authority of Singapore, MAS. So, very soon I expect that Singapore will also have a list of like registered exchanges that people can go and trade with sort of certainty that these are legit. That will protect you from scammers and stuff.
Yeah. There are a few exchanges, so y'all can go and read up and explore a little bit more. But we're not here to tell you go and immediately sign up for an exchange, right? Although y'all could ask Aaron on that if you want, since he works there. So I hope that answers your question, Emilia. If you have more, go ahead and ask Aaron after this session. Alan also asked, lots of whales pump and dump in Bitcoin. So should we trade or should we hold? Because the pump and dump seems to keep investors out, making it super volatile. I totally agree. So this was also my concern when I was very actively monitoring my crypto assets back then. Okay, and then I got too busy because I was pregnant, and then I went off to give birth, and I didn't touch the market for the longest time. Right, and that was when the whole so-called bubble crashed. So I think with crypto, it is still very much like the Wild Wild West. Right, the world has not fully been able to like grasp how exactly they should manage this digital currency. So when the assets are at this kind of stage, at this early stage, right, is for sure you're gonna see people like trading, pumping and dumping. There's gonna be scams. There have been crypto scams as well, right? Lots of ICOs that ended up running away with the investors' money. And when you look at their initial pitch, their initial deck, right, it seems so credible, but it ended up being a scam. So it's very hard to that's why we say that you want to be focusing. If you're a long-term investor, you want to be using money that you can afford to lose, and don't play margin, don't play leverage, because it can be dangerous. If you're a trader, then I can't share what has worked for me because I don't trade for the most part of my investment journey. But I can share about this story about my friend G. So he's a really, really well-known blogger in Singapore, because a few years ago, he made a big, bold public statement. He was selling all of his assets, selling his gold, selling his stocks, and he's going to pump it all in crypto. And his aim was to become a millionaire by riding on crypto, and he achieved it. Right, I'm super proud of him. And when I asked him how he did it, there was a lot of arbitrage, there was a lot of trading, and he spent a lot of time, a lot of effort on it. So I think he really, really deserves to be a millionaire based on the amount of work and effort and analysis and homework that he put in. But if you want to be trading Bitcoin or other coins, then I would say please go and learn TA and always manage your risk accordingly. Yeah, so that would be the two sides of the coin that we would share, right? The investor side and then the trader side. Evan, anything to add, or should I move on to the next question?
Maybe so it's like 9 o'clock. It's like 9:05 already, right? And I'm definitely happy to continue chatting, as I guess you must be also done. But do you think it's okay if I just share the promo codes I promised everyone? Because if not, some
Yeah.
people might need to leave, right?
Okay. Yeah, so we're gonna flash. So Aaron has a really good promo prop that he's gotten from where he works for you guys if you want to get started and haven't yet. But if you're gonna stay on, we will soon talk about the specific coins that you have. But in the meantime, Aaron, over to you. Please share a little bit more about Luno and how the people who are attending, especially for those who wanted that promo, can ride on this.
Awesome. Again, this is not a sponsored post or a sponsored event, right? So I actually asked Don, right? Like, why don't you share your own? Why don't you share your own promo code? And Don basically said that no, I don't want this to be commercial at all. So the codes that you see here are not affiliate codes. You see this Mr. Luno code here. It's tied to me, but I don't get paid anything because obviously I work for Luno. It would be a conflict of interest. There's no affiliate going on here. So these are really codes for you to put it in. And if you're a new customer, yeah, put this code in, and if you buy 500, you get 50 free. Put this if you're a Singaporean customer, new customer, Luno Web SG, buy SGD 200, get SGD 20 free. No sort of like, there's no sort of lock-in or anything. Like literally, you can buy 500, get the 50 free, and then withdraw 550 the next day if you want. So I mean, some people are like that, right? They calculate, hey, I can get 10% straight away. So yeah, there's absolutely nothing preventing you from doing it. The whole idea is we want to get people encouraged to start, and then yeah, hope you enjoy your crypto journey.
Yeah, so just to repeat that, right? We're not getting. I mean, there's a lot of skepticism recently. That people they say that everyone online, especially, is really just doing it because they want to get something. There's no free lunch. We can really tell you very honestly, we have chosen. Aaron and I have deliberately chosen that we do not want to make this an affiliate because it will skew our thoughts and what we say if at the end of the day the objective or the agenda is to get you to sign up and spend that money. So we're really leaving it all in your own hands. Okay, if you want to find a way to get into the crypto market, if you think that crypto is a good hedge against the great monetary inflation and you're looking for a place to start, then really thanks to Aaron who has gotten this from his company. Here's something that you might want to use. If you want to like hack it, I wasn't expecting you to share that, but anyway, yeah, if you wanted to hack the system in that way, I guess there's nothing stopping you. But yeah, we do not make a single cent out of it. Okay, so now that we've gotten that out, we're just gonna leave this here for so that anyone who comes in or out will be able to see this. Although I don't think they'll understand. People who are just coming in are probably gonna think it's an affiliate, but who cares, right? If they're haters, they're haters. So whatever. But we will go on to talk about the other questions. So I think on Facebook, right, there are questions on. Okay, I'll take the last general question before we go into specific coin, right? And there's a question from Kim, which is for novice. Should they buy Bitcoin and not other cryptocurrency? Why and why not?
You gonna take that, or I'm gonna take that?
You take you take.
I think Bitcoin absolutely is like, so the reason why you get into Bitcoin first is like, it's a bit like maybe I'll give you an analogy. It's a bit like learning how to play a musical instrument. When you want to learn a musical instrument, you don't start with say something very exotic like a flute. The reason for that is because very few people know how to play flute. It's very expensive to buy flute. um, you want to start with something that is very common, like say a piano or a guitar, because there's so much literature, there's so much reading you can study, there's so many courses people can teach you all about guitar or piano. So the same thing about Bitcoin, right? When you want to start into the cryptocurrency world, Bitcoin has been around for the longest. There's the most research, there's the most literature, it's the most secure. All the sort of regulated cryptocurrency exchanges, they offer Bitcoin first. So it's really a really great place for you to start. And if you want to start, again, like I said, start with an amount that's really small amount, right? Like your coffee money, 10 ringgit or 5 SGD or something. And then from there, learn. The learnings you get from Bitcoin, you can extrapolate into all the other coins that you want to invest in the future.
And I think also, I would just add on one more point, which is because Bitcoin is at the end of the day like the so-called gold standard, right? They're the like main one in the digital currency space. The other thesis is that when people are new to a space, they usually would go for the safer options first. So there is a high chance that people will flock to Bitcoin rather than the other so-called newer or less known coins right off the bat. And at the end of the day, most of the coins are still tied to either the stable coin or USD or Bitcoin or Ethereum as the mode of exchange. So if you go into Bitcoin, or the next one would be Ethereum, which is the next question, there you're probably going to have a lot more liquidity when it comes to getting other people to buy over your stake. Yeah, so that would be one reason why if you're a beginner, you don't know about any other coin, Bitcoin might be the so-called safer asset among the other coins to get started with. Yeah. Okay, I see more questions from. I see questions from Wei. Okay, Wei, you've been a really great audience so far, and thanks for chiming in with all of that facts and links that we couldn't put in because we're busy talking. But yeah, let's get to Wei question. She asked much earlier on in the session about where are the two coins? Hey, hang on, where did those two coins? Oh yeah, I see it. DGX and PXG. Aaron, this is your turn.
So to be honest, this is the first time that I've seen DGX and PXG. I'm so sorry. There are like tons of cryptocurrencies coming to the space every day, right? There's I think thousands of coins in the world now. So I'm so sorry. I don't actually know much about these coins. I guess my sort of broad sweeping statement is that I think Bitcoin is suitable for most people, and the more exotic the coin becomes, right? I think the risk goes up, sometimes exponentially higher, and I don't know if the return is going to go up exponentially higher as well. So I would say be very cautious, and any cryptocurrency. Cryptocurrency is high risk itself, right? Even Bitcoin, the safest crypto, is already high risk. Other stuff are even higher risk. So yeah, please beware. I know Wei En also asked just sort of a similar question. PAXG, which seems like a legitimate form of digital gold backed by gold bullion. What do you think of PAXG as a proposition to get hold of gold in one's portfolio? So maybe a personal story, like what 1 minute one, right? For many years, right? Because I listened to Warren Buffett, right? I said no, there's no way I'm buying gold. Warren Buffett thinks gold is like useless metal, right? So, but I think in recent years, I have actually started to realize that, hey, actually gold kind of makes sense. As digital gold, there's also like physical gold. So I actually made my investment into gold like only yesterday, actually, I made my first investment into gold. So I think gold itself is pretty cool. If people find a way to sort of convert gold into tokenized assets or tokenized coins, I would think that's pretty cool as well. Just be aware that, if they claim to audit everything, they claim that everything is like auditable and verifiable, just make sure that it is lah, because there's a lot of scams happening in crypto, and yeah.
I will share another personal story on this. So adding on to someone asked me, Lucas, Liang Yu earlier on asked about sharing my personal investment journey. That's more than 1 minute, so I'm not going to do it. I'll share bits and pieces. Okay, I can do a summary. But on this question for Wei En specifically, right, I would say I am doubtful. Because previously, and I think if you go back into my blog archives, I don't delete my articles because I believe in just being accountable for what I've said or written before. And I was previously very bullish on DGD, right? And I made good money, good ETH, Ethereum and Bitcoin money, which I didn't cash out to cash. On hindsight, I should have. But anyway, I made great profits on DGD back then in the past. And the same premise held. In fact, I even met the DGD main team in Singapore because that's where their office is. I even have a picture with them. And, I asked them about the whole premise. I asked them a lot of questions and I got some really good responses. Same premise, right? They were supposed to be go back in a safe storage, audited, and I mean, just look at where DGD is now. I really don't know what's happening. Okay, so this really brings me back to the quote where the market can remain irrational much longer than we can remain solvent. And I think in recent years, right, where DGD is not the only crypto project that has claimed to be backed by physical gold. Wei En, you mentioned this coin, that's a great one. But did you know that there's actually more than 70 over crypto projects that claim to be backed by physical gold? And I don't know how many of them are going to claim that they're audited. I'm sure most of them would, because that is like the safest option, right? But I think the question I would ask back to any of you who are considering this is, if your thesis for investing in a digital gold asset is because it is tagged to an actual digital gold that they claim is audited and you have no way to verify whether that is true, then why aren't you buying the actual gold instead? Or why aren't you buying the ETF, right? Why buy? It's like, for example, today Aaron comes and tell me, hey, Dawn, I have this coin, okay? I have
You
this...
should buy it. You definitely.
Can you imagine Aaron comes and tell me, hey, I'm going to have this ICO and it's going to be tagged to gold that I have in my wallet at home, my what do you call that, the safe storage box, okay, that at home is locked up, okay? I have split the keys with a few different very prominent, very credible people and I got people to audit it. Okay, it's very credible. Then I ask, can you show me the audit certificates or proof? Can I see the actual gold? And you're like, no, sorry, that's confidential, proprietary information, cannot. So I'm like, okay. So he said, yeah, just buy through me. Okay, this is exactly what it is about. So I mean, he could be telling the truth. We don't know. But to me, I would just be like, if I can't verify it for myself, then I wouldn't. And then the other thing is, if my thesis for investing in a coin is because they are tagged to actual physical gold, then I might as well just buy the gold ETF or the actual gold itself and keep it under my bed, right? I would not invest in digital currency only because of that. When I did DGD back then, it was because it was one of the only projects back then that had this premise, and it was really, really quite cheap. So it was a trade. It was a really good trade at that point. Today, the marketplace is so competitive now. There's more than 70 projects, so I would not even use this. I would just go ahead and buy gold myself. Yeah, so I hope that answers your questions on these gold back coins. I had another question. Hold on, I think Facebook, there was another question on a specific coin as well. Let me see. Oh yeah, someone asked about Ether as well. Aaron, you want to take that while I find the other questions?
Ether is really interesting because people say that gold is Bitcoin is digital gold. People say Ether is digital oil because Ether is so useful, right? You can program lots of things, lots of functions on top of Ether. It's very useful. So much of the crypto tech, tech innovations has actually been built on Ether. And then, it has a pretty good team behind it. It's very active in the community. So Ether future looks bright. The only thing personally, right, which is why I'm always bullish more on Bitcoin than Ether, is because Ether is a little bit more like its supply is not predictable, right? Some people say its supply is unlimited. Basically, they can issue as much Ether as they want. I think there's a yearly limit or something, but it's not like Bitcoin, which is scarce. So to me, the overwhelming favorite thesis for investment in cryptocurrency is, number one, store of value. Number two, something we haven't talked about yet, something we haven't spoken, which is censorship resistance. So Bitcoin to me, it actually fulfills these two main criteria, whereas Ether to me doesn't really fulfill the limited scarcity supply thing. So I'm not personally, this is personal opinion, I'm not as bullish on Ether as I am on Bitcoin. If you are a new investor, I would say try Bitcoin first, learn about the space, and then if you want to convert to Ether, then go ahead.
Yeah, I think Ether, I'm bullish on Ether because I think, the whole premise of how Ether actually empowers the developers is quite compelling. But yeah, I would say between Bitcoin and Ether, there's a stronger case to be had for Bitcoin. I think for anyone who's like already skeptical of the space and you're very cognizant of the risk that you're taking on, then Ether is going to be slightly higher risk compared to Bitcoin. Yeah, that's what I feel. There's also another question coming in from Christopher. He asked, what are your thoughts on investing in companies that are developing blockchain technology instead of cryptocurrencies? Okay, so I'll go first and then I'll pass over to Aaron. For me, right, it depends on what those companies are. So I think blockchain definitely is going to be the next future. In fact, even in terms of work, right, I've been having discussions with some people who are really, really bullish on blockchain technology, and there are ways that they're leveraging it to make business and processes much more efficient. So if the company itself has actually a listed stock, then I would use stock fundamentals to evaluate the company and take blockchain technology as one of the many assets, or perhaps a moonshot investment that could pay off handsomely in the future. So yeah, I wouldn't shy away from investing in companies that are developing blockchain technology. I would in fact embrace them. But it really depends on, at the end of the day, what is the pain point that they're solving. If they're just jumping into Bitcoin because it's the next big thing, jumping into blockchain because it's the next big thing, but it's not being used to solve a very real problem, nor to solve it well, then I wouldn't be supportive of that. But if it is, and it goes back down to the 6 criteria that I talk about, then that's something that I would definitely look at. What about yourself, Aaron?
Yeah, I agree with you. I think blockchain has been overhyped, overused, misused even in the past. Like there was a time where you just add blockchain to your company name and your stock would go up, right? That was back in 2017, 2018.
Yeah.
I think it's like what you say, it's a moonshot thing, right? You know, it's a bit like investing in ICO coins. Like you invest in 2019 will fail and one may succeed. So I do think that investing in any early stage company is a risky business. Uh, Probably more suitable if you're a seasoned investor, if you consider yourself, you have all your safe assets and you want to take this money, which is higher risk, and invest. It might make sense for you. But if you're starting out, I wouldn't think it's so appropriate. Like if this is your first investment, please don't go and invest in an early stage company. Just buy your ETF first, buy your robo advisor first. Start with the basics first, and then only once you have a stable base, worry about the speculative ones.
Yeah, I think even for Facebook, so disclaimer, I'm a Facebook investor and I'm long on Facebook. But even for Facebook, they're starting to explore digital currency, right? And it has not been very successful yet. There's been a lot of regulatory pushback. Companies like Visa have actually gone out of the consortium. So we still don't know how that would look like. But I wouldn't, so if you're thinking of investing on Facebook just because they are doing blockchain, then that's going to be quite a big risk. Instead, you should be looking at, hey, what does Facebook do? Social media, advertising. What's the pain point that they're solving? Okay, how does this blockchain fit into that? Oh, they're trying to expedite payments through their own coin instead of through other payment systems. So, okay, that seems like something that could fit into their entire ecosystem of business. So I would just take that as a potential moonshot. I will not count that into the actual evaluation of Facebook, nor the valuation itself. And that is exactly what I did when I was analyzing whether or not to add more Facebook. Yeah, I say add more because I'm already invested since a long time ago.
You're rich.
No, not yet. I wish it could be more. But anyway, wait, there was one more that we almost forgot to talk about, which is the Bitcoin halving event.
Oh yeah.
Yeah. So Aaron, could you break it down in like super noob terms for really beginners? How does that impact the retail investors?
Good. That's like my specialty. So, Bitcoin is what is known as Bitcoin. New Bitcoins are being created every 10 minutes, right? It's the way the system works. Any cryptocurrency also new coins are being created. So Bitcoin new coins are created every 10 minutes. Right now, it's 6.25 coins are created every 10 minutes. But as of last month, 1 month ago, it was actually 12.5 coins. So Bitcoin has this really interesting mechanism where every 4 years, the amount of new coins being created drops by half, which gives it this really interesting characteristic of being disinflationary, meaning that the supply gets less and less and less until the limit of 21 million is reached. So again, this is, I think, one of the big draws towards Bitcoin, because we spoke so long about the monetary inflation, right? Money, US dollar, whatever, can just keep printing, can keep expanding 7 trillion, 8 trillion, 10 trillion. But Bitcoin, we know the maximum limit is 21 million. Right now, we already reached like 18.5 million. So the halving thing is actually interesting in the sense that Bitcoin's inflation rate now is very similar to that of gold, right? So gold also, the supply of gold every year increases by about, I think, 1.5% because they mine it. Bitcoin right now increases like 1.8% per year. But in 4 years' time, Bitcoin's inflation rate is going to be below gold. So you can imagine like this is an asset gets less and less and less and less, more and more valuable, we hope.
It's a good question also. So I hope that answers the question, and it really goes back to demand supply as well, right? And I think for anyone who's who's trying to understand the halving, there's also that question of what about Bitcoin Cash? What about Bitcoin SV? Aaron, you're more in touch with this because you're working full-time in crypto. Can you take this?
Cool. So very interesting characteristics of Bitcoin. Bitcoin is computer code, right? And if you know the term open source, Bitcoin's code is open source, meaning anyone can look at the code and examine it to make sure that there is no, there's no fraud being done. No one is siphoning your money away, right? Everyone in the world, absolutely anyone, can look at the code to make sure that it's correct. This also means that Bitcoin's code can be copied, right? So there are developers in the cryptocurrency space who may not believe in Bitcoin's vision, right? They say that, Bitcoin's technology is too slow. It makes transactions too expensive or too slow. So they create their own version of Bitcoin. It's known as a fork, F-O-R-K, fork. So they created different versions of Bitcoin. There's Bitcoin Cash, there's Bitcoin SV, there's Bitcoin Diamond, Bitcoin Unlimited. There's so many variations of Bitcoin also, actually, if you go down the rabbit hole. But again, if you're new to it, I would say please start with Bitcoin first and learn from there.
Yeah, I think at the end of the day, for any investor in the crypto space, the first thing is please understand if you're a trader or an investor, because that is going to govern the way that you respond and react to the changes in the market. It's going to govern how you go in and out. Okay. The next thing is when you look at the entire marketplace of crypto, there's a lot. So the first thing, protect yourself from the scams. Avoid those that are super high risk, super scammy-ish, and where the founders or like the investors seem a bit dubious. I mean, trust your gut. That's all that we have to protect ourselves as well. So at least get those covered first. And then you narrow down into that whole universe of what other coins are there, right? So the next question you need to ask yourself is, what kind of risk are you willing to take on? And how long are you willing to hold? The other thing I would share from my own story, so adding on to earlier on, someone asked about my investment journey in crypto and Bitcoin, right? I would say that the thesis changed super fast. So I'll be very honest and share with you guys, one of the biggest wins and mistakes that I had in the cryptocurrency space was on this coin called Nano. It was so lucrative. I think, Aaron, you might remember this because we had some chats on it several years ago. But yeah, when I first invested in Nano, right? So the premise, the FA, everything checked out, right? The main person, the main founder was not like super, I mean, he was no Mark Zuckerberg or anything, but there was a certain sort of credibility to him, and he was really passionate about solving the problem. It was a great coin. So I invested a portion of my investments into it. Now, Nano quickly dropped. I made a lot of money first, but my mistake was I didn't cash out, right? And why didn't I do that? Because I was a long-term investor, right? I was like, okay, I am a long-term investor for this. I'm not a trader. So I'm just going to let those compound and compound. I'll just keep holding on to it. And then after that, right, as I mentioned to you guys, I went off. I gave birth, I got pregnant, I gave birth, I had to fulfill my cow duties and all. And I didn't have time to keep tracking or monitoring or responding to the market. So I couldn't manage it. And what happened was that Nano started to lose its main use case, because it was supposed to be the competitor to Bitcoin in terms of the transfers, right? It was a lot cheaper and was super, super fast. The old name was called Ryblox. If any of you are interested in history, you want to check that out. Okay. But Bitcoin, as we know, became faster. And then there was also Bitcoin Cash. And there were a lot of other coins that were starting to catch up to be more widely embraced, faster as well, cheaper, and most importantly, the branding and the so-called safety that people attributed to it was a lot higher than something like Ryblox or Nano. So Nano crashed. Until today, it has not recovered to anywhere near its previous height. It's one of my biggest regrets that I didn't cash out. But that's the key thing. We don't know. It can be a high risk or a high return investment. So if you are going to go into crypto investing, right? If you want to choose other coins, I would say be careful of the one that you choose, because just know that the thesis could change very fast. At the end of the day, the codes can be copied. And if someone copies it and does an even better job and is more successful at getting users onto the network than the original one, then there's nothing stopping people from going there and just staying onto the original. Yeah, so that's something that I would just be cautious, which is why I think if you're a beginner and you're very risk adverse, you might want to look at the more so-called like prominent ones like Bitcoin or Ethereum first.
I was looking at my phone because I just wanted to see how much the value of my Nano or Rai block dropped. I think I invested $250, and today it's valued at $7.52. So I think that's
insane.
a 90-something% drop, 97 or 98% drop.
Yeah, but at one point, your $250 was at least a significant 4 digits. Remember that?
No, I think I got in at the peak. So
right.
I got caught up in the hype and invested in a bunch of shit coins, and I basically crashed myself. So guys, if you're listening, don't be like me. Yeah.
So guys, if you're listening, first lesson, most important lesson, only use money that you don't need in the near term. And remember that it's still a risk. Okay, I think it is definitely a good hedge to have in the whole portfolio, but I would really manage that because I think it's still going to be some time for the world to really embrace this whole digital currency and move towards it. I see a question from Jeff. How would Bitcoin or cryptocurrency be affected by quantum computing?
Very interesting. It was actually shared within our company Slack group today. Yesterday. So the consensus is, I know we sometimes see a lot of articles which are a little bit alarmist, right? Quantum computing would enable people to crack Bitcoin within the next 2 years. My personal opinion is that is a little bit far-fetched because they're almost almost extrapolating, right? They say that quantum computing has grown from A to B in this amount of time. So it'll grow from B to X in the next 2 years. And I think that's like just really a simple extrapolation, which sometimes doesn't make sense. Technology doesn't necessarily work that way. Think about things like virtual reality and AI, how long they took to, to become mainstream. The other thing to also remember is that the encryption that's used in Bitcoin is used to secure most other things in random everyday life, from military codes to the encryption on your phone to the encryption on your online banking. The encryption systems that we use in Bitcoin is not just for Bitcoin. So if quantum computing is going to crack that, the whole world is basically going to end up in disarray. So if really quantum computing becomes a threat, I very quickly expect all the developers, all the people involved in cybersecurity to upgrade and enhance their encryption. So I don't foresee this to be a big problem.
Yeah, my same thoughts. I think I wouldn't rule it out. I mean, there's a lot of talk, and because I'm a Google investor, a lot of people are saying that Google's quantum supremacy is going to cause the damage of Bitcoin, right? I don't know. But I think that I wouldn't rule out that potential future in the long term, or maybe in the near term, nearer than what we would expect. But at the end of the day, I think that we should also give credit that the people in the crypto space, people like Aaron, who are full-time in crypto, are going to be watching this risk at the same time, and that they will try to manage and adapt accordingly. Yeah. So I just need to disclaim what Aaron typed on the group chat. It's not true that Don invests in everything. I can name you a lot of things that I do not invest in. It's just that, I have to disclaim when I invest, when I talk about the stocks that I invested in. Otherwise, it is kind of like bias, right? I don't want to be looking as though I'm pushing my stocks or like doing some pump and down scheme, because I'm not. But yeah, that's the disclosure. All right, we're going. It's 9:30 now, so we're gone on and on for like 1.5 hours. I hope you guys found this useful, and if there are no other questions, we'll probably wait like maybe 1 or 2 more minutes. But if there are no other questions, we'll probably end off here. And again, if you guys are interested in opening up an account, Aaron, you want to flash your slides again on Luno? Okay, we'll just leave this here. So just to reiterate, this is not an affiliate code. We're not earning anything from it. In fact, Aaron, I have chosen not to earn anything from this. So it's really all up to you. I'm not going to repeat the hack that Alan said. If you miss it, you miss it. Okay, but yeah, he shared a great way to earn 10% immediately as soon as the next few days. So yeah, if you guys have no other questions, we'll end off here. And I hope you found this useful. As always, we love talking to people on this. Just remember, this is kind of still the Wild Wild West. So talk to people, read up, track the market, and only invest what you can afford to lose. It is still high risk after all. Okay.
So
Aaron,
Don, maybe, yeah, why don't you share you have a new YouTube channel, right? Don't, yeah, why don't you
Oh, yeah,
say
yeah,
a few
yeah.
words about that?
Sure, sure, sure. Okay, yeah. So we do have I have a YouTube channel that was set up a couple of weeks ago. So I don't know if we're gonna put a snippet on this on YouTube or just redirect them back to the Facebook video. But if you guys wanna follow that YouTube channel, you can just go along. I didn't create like a short link because it's not my intention to talk about it. But you guys just go on YouTube, type in Budget Babe, and you should be able to see it. It's a channel where we'll be doing like free educational content for the community. So if you have any topics that you want to learn, just go ahead and share that on. You can Facebook message me or IG DM me or anywhere that you can reach me at even my email, and we'll be happy to talk about those topics. Right? I'm usually talking a lot more about stocks, and in fact, I'm gonna have a webinar tomorrow for those of you who are interested in the real estate market. So if you're wondering if REITs are still a safe investment in today's economic climate, then you can tune in tomorrow. It's going to be happening if in the evening at around, I think it's about 7 or 7:30. So look out for the link on my Facebook. But yeah, for education content, go ahead and follow, like, and subscribe to me on YouTube, and we will continue to upload all these kind of free educational videos that you guys can benefit from. Aaron, you should also promote your blog.
Yeah, so from my end, if you like what you heard, if you want to read more, I must say that I sincerely believe that I'm a much better writer than I am a speaker.
He
So
is. Oh no! I mean, you're both. You're both. I thought you were gonna say that you're better than the others.
no. I'm a much better writer than I am a speaker. So yeah, please check out my blog if you want. It's mr-stingy stingy.com. Tons of articles. So yeah, and yeah, leave a comment or come talk to me on my Facebook page. Thank you everyone for having me, especially Don.
No problem. Thanks, Aaron, for doing this. Thanks for sharing your insights from working in the cryptocurrency full time. I think that's really useful. I've learned a lot as well. And thanks all of you guys who sent in your question. It has really helped us to engage in a more useful discussion. And yeah, we'll catch you in the next webinar. Thank you. Bye.
Thank you. Bye.